The summer of 23, when Larry Fink changed his mind about Bitcoin and said BlackRock was going to come with an ETF, that was essentially the end of the bear phase. I mean, it really bottomed after FTX in Q4. But, and then, the release of all those ETFs in January of 24 and the Trump administration change, I keep saying that the Trump change of view and approach to our space is the second most important event in the 15, 16-year life of Bitcoin, cryptocurrency, blockchain, Web3, digital assets, whatever you want to call it. And that's because we've never had a government be supportive in the way the US is. And not only that, it's that the US is the most important, wealthiest country in the world. And, they have a mission now, as stated, to become the world's leading cryptocurrency blockchain hub. I mean, this is mind-boggling. This is part of their platform. 9 months ago, companies in the space, all sorts of projects were beleaguered, literally beleaguered, being attacked by the SEC. Okay, the Doge, not just eliminating whole government offices, but reducing the spending in those government offices. Plus, the tariff situation, which acts as a fiscal tightening, that needs to be offset by some sort of monetary offset to keep things in balance so the economy doesn't have too aggressive a pullback in liquidity, in demand side drivers, right? So it's like fiscal policy has been contributing to demand, and now it's not. And I think monetary policy needs to offset that. And the dollar is already sensing that. And that's why it's weakened. I think last thing we say, ideally, in a perfect world, Bessent and Trump or whoever should have gone down to Jay Powell and said, hey, guys, we're going to be undertaking the greatest fiscal tightening of the last 50 years. Give us some slack on the monetary side. Like, hey, let's work together on this. That would have been, and maybe they did do that. I don't know. But Powell, for whatever reason, is really holding back here. And I think he's, the next few months, the data will just, confirm that he needs to move. And that'll help Powell kind of softened a little bit. Trump softened a little bit on the tariffs in China. The markets told them, okay, guys, you went a little too far too quick. Now, I know Paul Tudor Jones came out yesterday and said, oh, the markets are going to go back down because fiscal policy is too tight and monetary policy, he's sure Powell's not going to ease. Well, Paul is one of the 2 or 3 greatest macro traders of all time. So it's hard to take a view against him, but I don't see that happening. I think that was it. And maybe we have to retest, maybe something happens. But I think pretty much that was the extreme. The markets priced it in.
Right. So do you think that bad news moving forward is actually good news for markets because that's just more strength for Powell to actually finally pivot? Or what do you think?
Yes.
We're probably going to get more bad news in terms of the economy over the next, let's say, month or two.
Right. So I think bad news to a degree is good. I think the unemployment rate going from 4 to 5 is good. And the unemployment rate going from 4 to 7 is probably not good. Right. So it's about degree 400. I think that's just fantastic because I'm also still involved in gold quite a bit. And as long as the stock market's sort of holding in, I think we're fine, So the Powell's comments and this and that, he'll cut next time or the time after. He's just waiting for some employment data. So, but I did read one comment on it that he's never said nothing more than he did yesterday.
100%.
One of my partners said that, Tad Smith. Tad said, can you believe it? The guy said nothing. I've never heard him say nothing as much as he did yesterday.
That was our summary of it too. Our community was like, did anyone watch? And there was literally no reason to watch it. It gave you absolutely no information.
That's the old world, guys. Focus on the new world. Slow. Come on.
Before we focus on new world, because we will obviously get into crypto, I just have a question around tariffs and this sort of trade war that's going on. I'm just curious your framework of it.
Australia is a real partner. Canada, hopefully we can, have that cleared up too. Mexico. So maybe the strategy here is like isolate China, come to them at the end, do a deal with India. That's great news. I mean, India in the next 20 years is probably a more important economy than China, too. I mean, a lot of people argue that. So I think this is just a way for the US to just, maybe align things, maybe not more even in our favor, but just to have things more balanced, and I just look, these kinds of developments take long periods of time to actually know the ultimate impact. So I think when the VIX hit 60, that priced in the maximum amount of uncertainty and fear about what the impact could be. But then we'll see the impact develop over, multi years. But as I said, all I think it does is it takes the edge off of any inflation fear. And then also, look, the reality is if you look at what AI is doing, that is massively deflationary. I don't know why the Fed hasn't done more homework on this. I just give you an example. If a service goes from being cost something to being free, he says the big challenge for human beings is philosophical, is what are we going to need to do with all of the time that's going to open up, because everything is going to be automated and robots are going to do everything for us. Look, I mean, and he's not the only one saying that. Like they're talking about like what AI is going to be like 2 years from now, 5 years from now. It's crazy. We've been pursuing intelligence, the species has, from the beginning. And now we have something that says, well, there's more intelligence in AI than all of collective humanity put together. This going back 10,000 years. So what do we?
We've never had this before. I mean, you can't.
I mean, what are we going to do?
Yeah.
Dan, this is
that's
everyone
not
we have on.
Okay.
Everyone we have on recently has been talking about AI and how much it's going to change. And one of the questions I have from this is, obviously, like as you just said, why does he care about CPI? Like, who cares about that anymore? Like, that's the old world stuff you keep saying. And what indicators or what
adapt, this robotic AI agentic future? Europe, I think, is way behind. I mean, just in our space, look what happened. Tether decided yesterday they're exiting Europe completely because of these micro regulations. I mean, think about how phenomenal that is. They're exiting a whole economy that's the same size or maybe a little even bigger than the US because they don't want to be subject to those rules. That doesn't seem like a tech forward kind of place to be. You know what I'm saying? And so the people who are getting left behind, it's massively deflationary for them too, because they get crushed. And then the people implementing AI, their margins explode. And so, look, I think it's exciting and it interacts with blockchain as well. I think AI and blockchain, all these agents out there, the move to, the move for the analog world to the $800 trillion in assets that is out there, it's a little too degen for them. And I focus on there's 800 trillion in assets and the digital asset ecosystem is worth like 4 trillion, just like 5%. It's very small, very small. And that's why my new fund's called 50T, because I think the value of the digital asset ecosystem generally can get to 50 trillion in the next 10 years. And that's still small because you figure the old world will go from 800, call it to 900 or close to 1,000 trillion. So it's still going to be only like 5 or 6%. But I think we can head to 50 trillion. That means Bitcoin, in my view, can go up to $1 million. It'll be $20 trillion of value. So I think that's where Bitcoin's heading. And then you have 10 trillion for the altcoins and everything else. And then you have, I think 20 trillion will be all the rest of the businesses, the projects, everything that is involved in this move of value on chain. And that's how I get 50 trillion. Some people, because they, sometimes
especially live,
they're actually behind your desk right now, right?
No, they're not, but they're not. But it's because I kind of say everything as it is, basically. And
Dan,
I want to share a lot more information, but it's a pretty, pretty big. We invested 140 million into this company, and we'll make multiples on that. So it's a nice hit for us. And on the Coinbase side, I had an old friend and someone who I've known a while who was leading the charge on the Coinbase side too. So it was nice to be able to, have contact with both sides. And of course, the banker did a great job to get this across the line. I think it just still needs some regulatory approval, but they announced it today, and it is, I think, the largest deal in the history of the crypto markets. We have another one, funnily enough, coming next week. I think it's public, so I don't know if I'm supposed to say explosion. Stablecoin settled $10 trillion last year. 4 years ago, that was zero. Was stable coins, the theme of last year? Were meme coins a theme, and everything seems to go to an extreme, gets super hyped and then comes down, and then over time reestablishes itself. I mean, DeFi is right now experiencing a super renaissance right now. I mean, revenues in DeFi in December were $230 million. That's up, over 10 times in the last 18 months. But that's happened very quietly. Like who's even talking about that? Now,
we are.
Look, I talked my book. You guys have. Okay. But I talked my book a little bit because I always say, and I say this really clearly, I say, I don't know much with a 99% degree of certainty. But I know with a 99% degree of certainty, okay, that Coinbase will not be the only large crypto blockchain public company in the next 5 years. And so this is a story that has not yet played out. This is a thematic that is not yet, the tariffs aren't impacting them. Monetary policy maybe is impacting a little bit with liquidity, but we know that's coming. RWAs, that's very TradFi focused, companies that are focused on that. Maybe there's a desire to own those types of companies like Securitize. So again, the only thing in my mind stopping that deluge is that just some of the companies are a little early, a little small from a revenue perspective. But again, I'm 100% talking my own book, but I've been talking my own book for the last 5 years. I thought when I launched these funds and had the idea for them in 2019, it was always my idea that this was going to become a big sector within the S&P 500. And in 2019, people were like, Dan, there are only 20 companies in your investing universe and they're all private. You're out of your mind. So I'm always being told that, that. But I think that's a future we could see.
For sure. Completely agree. Dan, absolute pleasure to get you back on the show. Thanks so much for your
like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.